In this video, we will break down why stablecoins will explode and what investments you can make during this beautiful dip to position yourself to reap the rewards of the stablecoins market exploding. Stablecoins, digital currencies pegged to real-world assets like the US dollar, are becoming more than just tools for crypto traders to park funds during volatile markets. They're transforming into a global financial infrastructure, enabling real-time payments, remittances, and wealth preservation, especially in regions plagued by inflation or weak banking systems. In 2024 alone, stablecoin transactions surpassed 27.6 trillion, exceeding the transactions of Visa and MasterCard combined. With over 220 billion in circulating supply, stablecoins are no longer niche. They're financial superhighway for both developed and emerging economies. In countries like Venezuela, Nigeria, and Turkey, citizens are increasingly using stablecoins as lifelines. When local currencies lose value due to inflation, stablecoins offer a form of digital dollarization, providing stability and access to global commerce. A recent Visa survey showed that nearly half of stablecoins users in emerging markets rely on them for wealth preservation, not speculation. With just a smartphone, individuals can bypass failing banks, send money across borders for pennies, and protect their savings from local currency devaluation. Thanks to blockchain upgrades and layer 2 networks like Arbitrum, Base, and Optimism, transaction costs have dropped by 90% and settlement times are now near instant. This means stablecoins can process payments faster and cheaper than banks, PayPal, or credit card companies. Real users are catching on. Over 20% of stablecoin users now make daily transactions using these tokens, and platforms like Tron, Solana, and Ethereum are leading the charge in transactional volume. Corporate and institutional adoption is booming. The world's largest financial players are no longer on the sidelines. Visa now settles payments with stablecoins. PayPal launched its own PYUSD, and Stripe has acquired Bridge Network to supply stablecoins payments globally. These developments unlock billions in previously inaccessible capital and streamline international commerce. Big tech is also entering the scene. SpaceX uses stablecoins to repatriate sales revenues. Dollar app enables USD payments in Mexico, and AirTM disburses salaries into Latin America, all powered by stablecoins. By 2026, it's projected that half of the world banks will offer stablecoin-related services, and the market could balloon to 500 billion in value. Stablecoins support US financial dominance. While much of the crypto world aimed to disrupt the dollar, stablecoins have ironically strengthened it. With 99% of stablecoins pegged to the USD, they are reinforcing US monetary dominance globally. Even US Federal Reserve officials have acknowledged that this dynamic, nothing that stablecoins could extend the international reach of the dollar more efficiently than traditional banking ever could. As of late 2024, stablecoin issuers like Tether and Circle are among the top 20 holders of US government debt, holding over 150 billion in treasuries. This not only helps finance the US, but also reinforce the dollar's presence in global markets. Regulatory clarity is finally arriving. Regulatory uncertainty has long been a barrier, but 2025 is shaping up to change that. The European Union's MiCA regulations coming into force in January will legitimize licensed stablecoin issuers and potentially force out unregulated ones like Tether, at least in the EU market. This opens the door for stablecoins like USDC, which have already obtained necessary approvals. In the US, the political tide is shifting as well. President Trump's 2025 announcement of a strategic crypto reserve and growing bipartisan support for crypto regulation signals a future where stablecoins embraced by the highest levels of governance. New stablecoin modules are emerging. The evolution of stablecoins isn't stopping at fiat-backed models. Athena Labs, a non-fiat-backed stablecoin project, has amassed 6 billion in total value locked in just 12 months. By using a delta-neutral trading strategy, they offer yields as high as 20 to 30% depending on market conditions. Meanwhile, yield-bearing stablecoins are becoming a popular alternative, especially outside the US, as they begin sharing interest income with users, something that Circle and Tether have resisted so far. These newer models could shake up the stablecoins market even further, offering users real income on their digital dollars. Challenges remain, but so do the rewards. Despite their potential, stablecoins still face challenges. Lack of deposit insurance. Unlike traditional banks, stablecoins issuers don't offer government-backed protection. Banking risk, as seen during the 2023 Silicon Valley Bank collapse, Reserve funds held in traditional banks can expose stablecoins like USDC to depegging events. Concentration risk. Just 4 issuers control 90% of the market. Still, proposals for stricter regulations, mandatory audits, and enhanced transparency are gaining support and could solve many of these problems while allowing the stablecoin market to scale further. The path ahead, a mainstream financial tool. Stablecoins are no longer just tools for crypto traders. They're fast becoming mainstream financial instruments. In countries with unstable economies, they offer hope. For the world's largest corporations, they offer efficiency. For governments, they represent an opportunity and a challenge. By the end of 2025, stablecoins are expected to double or triple in market cap, expand into localized stablecoins like IED, Euro, or BRL, be supported by banks, payment providers, and tech giants, or integrate more deeply with traditional finance systems. Stablecoins may have started as a temporary parking lot for traders, but today they are evolving into the rails of the global financial system. If you're looking for one of the biggest opportunities in the crypto over the next 5 years, this is it. Now, which are the top 5 companies that you can invest and benefit financially from stablecoin boom? Number 1, Coinbase. Coinbase owns a large stake of Circle, the issuer of the second biggest stablecoin USDC. Out of 1.7 billion in revenue last year, Circle allocated 1 billion to distribute partners, of which Coinbase received 900 million. In their revenue sharing model, Coinbase is taking 100% of their interest on USDC held on its platform and 50% on the USDC held outside Coinbase. By getting some Coinbase stock, you don't get exposure to stablecoin boom, but the crypto boom is in general, as Coinbase is top 2 cryptocurrency exchange in the world, and they are heavily involved with big institutional players like BlackRock. They are a keystone for crypto ETFs, and they are also heavily involved as advisors to US crypto regulations, and it seems like politics in general nowadays. Number 2, Circle, the issuer of USDC. Circle is the issuer of the second biggest stablecoin, USDC, recently announced that they're filing for IPO to become a publicly traded company on the Nasdaq stock exchange at a $4 to $6 billion valuation. And while you can't invest in it yet, I mention it because you should keep an eye out for when the listing of the stock goes public. USDC has approximately 26% market share of all stablecoins, and we could see that the market grow as they seem to be working politics better than Tether, the issuer of USDT, with examples like the MiCA rules, with USDC being allowed in Europe now, but USDT not getting the MiCA license, and other things like Circle going public and their many partnerships with companies like Binance, Coinbase, Sony, Visa, and more. Number 3, they're ones that dominate the stablecoin transfer volumes. In this graph, you can see the top 10 chains by stablecoin transfer volumes in 2024. Of course, the biggest one that we have is the Solana with 10.5 trillion. The next one is Ethereum with 7.8 trillion. And then we have Tron with 5.4 trillion. And then, in my opinion, the most underrated, we have the BNB chain with only 899 billion, with huge potential to grow even more, which I think will happen very soon. By taking investments in some of these crypto projects, you not only gain exposure to stablecoin market growth, but the asset itself. And during this dip, I would say it's the great idea to get many of these assets, especially Solana. Number 4, Athena. Athena's core innovation lies in its creation of USDE, a synthetic, yield-bearing stablecoin designed through a delta-neutral strategy, pairing long positions in staking Ethereum with a short future to neutralize volatility. This unique module allows Athena to offer attractive APYs, 20 to 30% in certain market conditions, giving users yield opportunities beyond that what traditional stablecoins offer. In just 1 year, Athena managed to accumulate 6 billion total value locked, a strategic achievement that underscores both trust and demand. Its presence in stablecoin market is no longer experimental. Athena is now considered a major competitor to fiat-backed giants like USDT and USDC, despite USDE being non-fiat backed. Strategic partnerships have also accelerated Athena's rise, as Athena is backed by major players like BlackRock, Dragonfly, Arthur Hayes, Binance, and Bybit. Athena, the native token, powers governance and has strong tokenomics and buybacks tied to platform revenue. In short, Athena pioneering a new stablecoin model has meaningful partnerships, strong growth metrics, and smart tokenomics, making Athena a promising long-term investment. If you enjoyed this video, check out these 3 of our previous videos, as they include similar forward-thinking research that can position you in other sectors that are about to blow up in the future. Also, please leave a like for our efforts, comment your thoughts, because we want to know what you think about all of this. Share this video with your family and friends so they don't miss out, and subscribe so you don't miss out on our future insights. Until the next one, peace.